There may come a time when you need to buy a house, but the market conditions are less than ideal. And that pretty much sums up the story of today's real estate market. But if you're in the market to buy because the benefits outweigh the risk, then stick around, because in this video, I'm gonna go over the top 5 mistakes that I see buyers making right now and how to avoid them. Hey there, I'm Jordan Reeder, your Seattle area real estate agent. Every week I drop content about everything that you need to know about moving to or living in the greater Seattle area. Let's be honest, navigating the real estate market as a buyer today is tough. You're taking into consideration a lot of factors like what loan programs to go with, wild fluctuations of interest rates, and determining what a fair offer even looks like. So there's simply a lot more factors to deal with today as a buyer than there were 6 months or a year ago. So as a full-time real estate agent, I see a lot of transactions happening on a daily basis. And with that, there comes some mistakes that I think can be avoided if you prepare yourself as a buyer first. So here are the top 5 mistakes that I see buyers making today and how to avoid them. All right, so mistake number 1, not putting enough money down. So there are a few reasons why this isn't a good idea, especially today. So first you have PMI, or private mortgage insurance, and that's usually required when you have a conventional loan and make a down payment of less than 20% of the home's purchase price. So PMI rates, they're gonna vary by credit score and other factors, and typically are gonna range from about 0.58% to 1.86% of the original loan amount. So just to give you an example, on a $700,000 house, you're looking at an additional $321 or more per month until you reach that 20% equity position. All right, so another reason why putting too little down is a mistake is because it won't leave you with the good equity positions. So if you put 3 to 5% down and the market goes down, your equity position, meaning that equity cushion that you have when you bought, could easily be eliminated. So that, on top of having to pay for PMI, is not a great place to be. If you put 20% down and the market does correct a little bit, at least you still have a decent equity position in the property. All right, so mistake number 2, forgetting about closing costs. So this is a big one that most everyone forgets. Here's a copy of the estimated closing costs on a $700,000 house. And I assume here that you would be putting about 20% down, which is pretty standard. And most people think that they need at or at least close to that number to close. However, there are more fees to consider when buying. So first you have prorated interest on your loan, which you'll see here. And this estimated amount doesn't even take into consideration buying down your interest rate if that's something that you're looking to do. You'll also have settlement costs, which you'll see here as well. Now, these are basically title and escrow fees charged to you to close the transaction. Then you'll have other lender fees like appraisal and recording fees, which you'll see here. And finally, you'll have prepayments, which is prorated property tax, homeowner's insurance, and other items that you'll have to handle, which you'll see here. So all in all, in this example, you'll go into it thinking 140 to 145K will cover the transaction, but it actually is gonna be 152 to 155 or more. So not a tiny amount that you're gonna have to come up with to close. So just be prepared for this so that you're not surprised at the closing table. A good lender is always gonna make sure that you're aware of this beforehand. All right, the third mistake I see buyers making is buying a house that they can't afford, especially in today's market. Now, I'm not talking about what the bank tells you you can afford. I'm talking about what you can comfortably afford given the market conditions today. So banks have a formula. Obviously, I'm not gonna go into that formula in this video. I'll shoot another video on that. So get with your lender, really understand the true cost of owning a house, and see if that fits within what you feel very, very comfortable with over the next 3 to 5 years. So this is a really good segue into the fourth mistake I see buyers making today, and that is not factoring in job security and cash reserves. There is only one word I'd use to describe times of recession, and that is uncertainty. So here in the Seattle area, we've seen tons of layoffs happening each and every day, and that is something that I really try to discuss with would-be buyers before deciding on owning a home right now. The next question that I have is, how many months of cash reserves do you have saved? So you might be saying, well, hey, you're just my real estate agent, that's none of your business, but it's important to know these things for 2 reasons. So number 1, I care about my clients' well-being, right? And if I can help them avoid a painful situation, I'm gonna do that to the best of my ability. and have those tough conversations early. And number two, I don't want you to lose money. So right now we're seeing a lot of buyers backing out of real estate deals because they don't have enough capital or they're getting cold feet. Making sure you feel that your steady job is secure and that you have plenty of money to fall back on in case of an emergency is going to help ease a lot of that stress when it comes time to close on your new house. And finally, mistake number 5 that I see buyers making is choosing the wrong lender and the wrong loan program. Now these two go hand in hand, right? If you choose the wrong lender, then you're probably going to be opting for the wrong loan program, which could affect you for years to come. So what even makes a good lender? It's really 3 things: good communication, easy to get a hold of, and takes the time to walk you through all aspects of the home loan process, regardless of your experience level. So great lenders are going to take time with their clients. They're going to walk them through what could be the largest financial decision that they're going to make in their lifetime. They should go over what loan programs are available to you and help you actually understand the nuances of each one. And especially today, they should be able to discuss historical interest rate data so that you can confidently see where the market is headed while you own this new house that you're looking to buy. So at the end of the day, if they're a good communicator, if you can actually get a hold of them on the phone or take your texts, whatnot, and they actually take the time that you need to feel comfortable about the home buying process, then you're probably in good hands. Never just go for the best interest rate. Make sure to take these factors into consideration before working with someone. All right, so hopefully I've given you some food for thought. If you're looking to move to the Seattle area or already live here and are considering a move and would like to chat about anything that you've seen in the video today, I'm gonna leave my contact information right here, so feel free to call, text, or email me anytime. You can also click on the links in the description below to schedule a call with me or to download my free guide, Helping Sellers in Seattle Move Up to Their Next Home Using My Move Up Method. Since you now have all the information that you need to avoid those 5 mistakes that I see buyers making in today's market, be sure to watch this video next where I'm going to go over the 7 best opportunities for buyers moving to Seattle today. Thanks again for watching, and I will see you on the next one.